Welcome to this Energy Quick Chat where we rub minds with stakeholders and players in the energy markets. Now, after years of steady, slow growth, there are clear signs that the African carbon market is starting to take off. At its COP28 climate summit set to be held in the oil-rich United Arab Emirates later this month, carbon markets are set to be high on the agenda as some African leaders are hoping to capitalize on this. Joining me now to discuss this is my guest, Manoj Sinha, the co-founder and CEO of Husk Power Systems. Husk Power is the operator of the largest fleet of community solar mini-grids across Africa and Asia. Thank you so much for joining me on Energy Frontiers today, Manoj, and congratulations on your recent $100 million funding round.
Thank you very much for having me.
Right. So let's dig right into it. Speak to me about what Husk Power Systems has been doing on the ground using the carbon market to support your mission in Africa.
Let me set some context. So I started this company, Husk Power Systems, in Bihar, India, 15 years ago. I was one of them who had access to some electricity growing up. And therefore, that turned into a lot of opportunities for me personally, while my own relatives and cousins grew up in darkness and they did not get any opportunity at all as compared to what I got. So that really inspired me to start Husk Power Systems to really install decentralized power plant system and provide electricity in a renewable fashion, reliable fashion, and a sustainable fashion, which is affordable for the rural parts of the world. So that was the genesis of starting Husk Power Systems. So I'm one of them that had access to some electricity while my cousins didn't. Multiply that by more than 1 billion people, and that's how many people approximately do not have access to any electricity or some electricity in the continent of Africa. So that's why we started replicating our mini-grids model for Africa market to power these people from the very beginning with 100% renewable and sustainable method, so that we are not adding any more to the carbon and still deploying electricity in an affordable way. So carbon plays an important part of our decentralized model that is 100% renewable, is reliable, and affordable for the people that we serve. And carbon emission avoidance, because of that method, is avoided from the very start. Unlike Global North that started their journey with fossil fuels, and now they are trying to offset those carbon that has been accumulating for hundreds of years. So that's the key difference between what we do in Africa markets for the rural parts of those countries versus what we see in the Global North.
Now, with the increasing awareness of climate change, how are businesses like yours and others adapting to the carbon market opportunities?
So carbon plays quite a good or important role in bringing the commercial investments that is absolutely needed for us to expand over hundreds of thousands of mini-grids in Africa as a continent. So if a project, in our case, what we do have is these mini-grids that are 50 kilowatt in capacity to 100 kilowatt in capacity, and we can serve a community of 400 to 1,000 households and businesses in a decentralized manner. Of course, we need to replicate it hundreds of thousands of times to serve those hundreds of thousands of communities around Africa continent. To make these assets commercially viable and fundable, carbon offset, which is traded in the world market, plays an important role because it puts the return on asset above the threshold that then attracts commercial capital. We need to the tune of $100+ billion in order to replicate this model across Africa. And carbon offset and market therefore plays a very important role at it puts the return on asset above the threshold, which then attracts lower risk infrastructure capital, which is absolutely needed to replicate hundreds of thousands of times.
I love what you said there, but now let's talk about finance, which is the big man in the picture. What role can the carbon market play in unlocking capital for African investments?
Carbon market is quite important. So, in particular, carbon market was developed through UNFCCC framework that took a lot of factor from global north as benchmark. The first and foremost thing that we think is important is to benchmark what is happening in Africa or sub-Saharan Africa and benchmark that before applying verbatim what happened in the global north, right? So that's the first thing. What I mean by that is a diesel generator in, let's say, Nigeria as a country emits a lot more CO2 because it is inefficient, it is running inefficiently, and that is very different from a very efficient diesel generator running in, let's say, Americas. So that's the first thing that needs to be done. Benchmark it for the market that it is being done for. Nigeria is an example in this case. And then come up with a carbon framework that works appropriately for Africa as a market. Then global north, if you look at the global north of Western economies, they have been emitting CO2 for hundreds of years. They really need to bear the cost or the burden of CO2 emissions that is much higher per capita than carbon emissions in Africa market. And that's how the price differential for carbon offset in Africa should be traded at least at 100% premium as compared to what it is traded in global north. That's the first thing that is needed for the carbon market to incorporate, which will make then commercial capital even more attractive to come in these markets that is needing, again, hundreds of billions of dollars to deploy renewable assets in order to electrify a billion people in Africa continent.
Right. So what do you think is the biggest challenge for Africa in developing a robust carbon market? It's been slow for some time. So what is the biggest challenge for Africa?
The challenge starts from the very fundamental process of just benchmarking what it is now. And therefore, if we were to replace a diesel generator in Nigeria or Kenya with a renewable asset, what is that in terms of CO2 emissions avoided, right? Similarly, if the deforestation were not to happen in an area in, let's say, Tanzania, what would that mean in terms of CO2 emissions avoided? That's the benchmarking that needs to happen. And the good news is we at Husk Power Systems, we are working with the likes of SE for All to actually benchmark that. So that's the first fundamental hurdle that needs to be crossed. Second is carbon market typically is not very transparent. And that transparency is absolutely needed. And how do we get there? Like I was saying, CO2 emissions is kind of a balance sheet item. You have been emitting for 100 years. That means you have a lot of CO2 in your balance sheet that needs to be offset by a relatively newer balance sheet that is in Africa. So the differential in pricing for carbon offset in Africa has to be established in a more financially transparent manner. So with these two combined, I think Africa can lead the carbon markets from the perspective that carbon emissions per capita is already very low. And if we start doing everything right in Africa, that actually helps solve a lot of CO2 that have been emitted for 100 years in global north, and they pay the price and premium for that.
So before I let you go, let's talk about COP28, which is coming up in November. What are your expectations? What are the conversations that you're looking to have on those tables when those conversations start in terms of the progress on the carbon markets?
So COP28 or this mechanism has been on with the UN being the leadership for making this happen or compact happen for more than 2 decades. In my personal opinion, I don't think this has been successful, especially as it has been going on for 2+ decades, and the progress against 25, 30 years of efforts has not been great. In my opinion, a new framework needs to be devised, which is action oriented, which has to be a rapid action implementation in different parts of the globe. And UN may not be the right agency, in my opinion, to be able to carry it to the next stage. The time is of the essence. We have 1.5 degrees Celsius that is expected to be crossed before 2030. We don't have time. The time is of the essence, and we all need to do our part. And this has to be a new framework that executioner or private parties and governments can come together as a PPP model to make this happen and executable on a very short timeline basis.
Right. So a collaborative effort where everybody's voice comes together for a new framework to be heard. Thank you so much, Manoj, for those insights about the Africa's carbon market. And that's it on our Energy Quick Chat today. Thank you everyone for watching. Bye for now.